guys, welcome back to the Fourth Revolution Quarantine Edition. Today we'll be talking about a quote that I know you probably heard at the bottom, but there's more to the quote than you think. So the quote starts out, it's a Warren Buffett quote, one of the most famous investors of all time. It starts out, be fearful when others are greedy, and be greedy when others are fearful. And I know I flaunted the second half of that a lot at the bottom, and it ended up working out. I mean, we had a massive rally off the March lows, and now we're hitting this limbo stage, and I'm thinking that we are being a little bit too greedy right now, and it may be time to get a little bit more fearful in our equity positions. So this is a chart of the S&P 500. I know I've shown this to you pretty much every video that I've set out here, but it's an important chart to see. This is the broader equity market, and it's important to see how the broader equities are trading. So right now we're bouncing off of our highs that we hit in early June, and we're kind of in this limbo phase as investors measure the risk reward in the equity market. So we're kind of trading between the 3150 level and the 3000 level, and investors are weighing the options between the uptick in COVID cases, which is jumping to all-time highs right now as far as daily cases go, and the fiscal stimulus that they expect to come. Obviously, this uptick in cases could be devastating to the small business economy, and other brick and mortar retailers, and we could see another downtick as economies shut down if there is a larger uptick. Right now, Fauci is speculating that we could see upwards of 100,000 daily cases if this trend continues. Right now, we are right below 50,000 daily. But if we do, I mean, there's no question that we're going to see another pullback in this equity market. So the levels that I'm looking at right now, I've discussed these before, I know, but it's important to reiterate that we're looking at 3,000 for the S&P 500. That represents the 50-day moving average, as well as this 50% pullback from our lows in mid-May to our highs in early June. So look for that level. That's going to be a battle between the bulls and the bears if we can get down to it. And if we pass through that, I could see us coming back down to this 2935 to 2945 level, which represents another Fibonacci level that is going to be very important in this war between the bull and the bears. So I am skeptical right now. I'm not putting anything on. I am just sitting and waiting, potentially buying some puts in the broader market if we can see our oscillators here. We got the relative strength index right here and the stochastic oscillator showing that we're not quite overbought yet, but if we get to that level, I'm no question going to buy some puts on the broader SPY here. So here is the Nasdaq 100, tech-driven. Obviously, tech has seen an enormous tailwind throughout this pandemic, and it's unbelievable. I mean, we've seen almost 5 years of technological advancement shoved into 6 months from this quarantine, and it's really pushing these stocks further and further up. And the low interest rate environment that the Fed is giving us right now is making these companies even more valuable today than they were before. So this level right here is a little bit frothy. I would say it's semi-justified, but a lot of analysts are getting skeptical. You can see our oscillators right here are getting close to hitting overbought territory, and they're saying that right now the valuation of a lot of these tech companies is the highest it's been since the dot-com bubble, which is a little bit concerning, considering the economic activity and the economic uncertainty that we have in the markets today. So looking at some of the big drivers of the Nasdaq 100, we can see we've seen almost 30% from Microsoft right here in green, 31 from Adobe, and look at this. This is Tesla right here, 160% growth. And this company just passed Toyota, making it the largest automotive company in the world, and it's only produced just over 1 million cars, which is a fraction of what these big automotive companies produce annually. So it's crazy how much I guess how much optimism the markets have in these tech-driven companies, and it's something to be concerned about at the same time and be excited about. I mean, these companies are going to be driving the next decade of returns. And these are companies that I would love to get in, but I'm not buying yet. Like I said, we're a little bit overbought, and a pullback would be tremendous for anyone that's looking to buy any of these companies. So Facebook is trading right around all-time highs here, and we had a pullback last week off of a broader boycott of the site, saying that they're not doing a good job policing content. And, we bounced right back off of that. And honestly, I think the stock is a buy now. Companies don't realize that Facebook is a necessity. It doesn't just give you the brand, it doesn't give you the brand exposure that a lot of content sites give you. It gives you actual customer acquisition, which is something that, no other site can really compete with. And Facebook's broad portfolio of social media sites and platforms gives it almost a monopoly on this. And even if they wanted to boycott this kind of platform, they really can't afford to. So I'm a buyer of Facebook today, and will continue to be as this rally drives. But like I said, don't buy too much of it right now. We are still at frothy levels, and if there is a broader pullback in the tech industry, there will be a pullback in Facebook as well. So some other stocks that have been stretched a little bit, but I still like. So this is Square. You can see we've hit overbought territory in both my oscillators, but this stock has just driven. It's ripped from low or upper 30s all the way up to 113 today. And this company is revolutionary. It's driving the fintech industry for small businesses, and it's growing into larger businesses. So this is a company that I am really looking to buy on a pullback, and drive, because this is going to be a driver of the fintech revolution that we're going to see in the years to come. Next one is Splunk, real-time data management. This company, I really don't even think has hit its full potential as far as the stock price goes. But once again, a little bit overbought as far as my oscillators go. And, it's ripped from the bottoms. What is this? We've traded below 100. Now we're over 200. I would wait for a broader pullback in this to really put on a large position. But if you are a long-term investor, don't hesitate to put on a small position in this revolutionary company, because the real-time data management that Splunk offers is going to be a competitive advantage that a lot of companies and enterprises are going to require to stay competitive in their industry. So Hubspot's the last company I'm going to talk about. It got hit pretty hard and didn't recover as well as some of its competitors because of its exposure to small and medium-sized businesses. But it is beginning to recover more and more. This is a CRM type platform. It's similar to Salesforce, but it's catered to smaller businesses. And this is going to be a necessity as these small businesses cut their headcount, and they're going to need things like HubSpot's CRM, marketing hub, sales hub, and servicing hub to make up for that headcount loss. So I think this company has a huge amount of growth potential, and I would continue to keep an eye on it and definitely buy on a pullback. So remember, guys, that the equity markets are a very, very complicated instrument. And right now, there's so many things that are going into it. I would still be very, very cautious at the levels that we have risen to. So don't be hasty in jumping into any large positions. So don't forget to check out Zacks.com/promo, where you can check out my report, ESG Investing, for the next decade of sustainable investing that has outperformed the broader market over the last 5 years. So don't forget to check that out, and thanks for watching.